Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the virus seems to be peaking in the West, except perhaps in the US. In the US, their respected Congressional Budget Office has updated their forecast for the US economy, expecting a 7% fall in GDP in 2020 and a rise to over 10% in their jobless rate. And the US President declared it was up to state governors to decide when to reopen, and he took to Twitter to encourage protests in states that want to extend the lockdown for public health reasons and goading people to break lockdown protocols. And the Canadians have extended their border closure with the US. Meanwhile, Boeing said it would reopen its airplane manufacturing plants in Washington state this week, bringing 27,000 employees back to work under new safety protocols. This is despite continuing cancellations for its 737 MAX airplane. And the Fed has established a new $750 billion bond buying operation for issues from investment-grade American non-bank corporates. Like the Canadians, the Chinese have tightened their border closure with Russia, also fearing reinfection and undoing the gains they've made. In China, their first quarter GDP fell 6.8% from the same quarter a year ago. That was worse than the 6% markets were expecting. And it's a huge reversal from the 6% rise in fourth quarter GDP for 2019. It is the first solid indication of the sort of shift other countries can expect when they report their second quarter 2020 economic growth data. And China is expected to release new major stimulus soon to right their economic ship. And China's real estate market made a strongish comeback in March, down only 15% from the same month a year ago after being completely locked down in February. In the last few days, the Baltic Dry Index has started to rise noticeably off its depressed base. This isn't back to anything like its September 2019 levels, but it is approaching its 2020 highs. Iron ore and steel-making coal prices are staying elevated. In Australia, their largest bank says they expect house prices in Sydney and Melbourne to fall at least 10% in the next 6 months, as virus-triggered unemployment cuts into demand. The US Treasury 10-year yield was holding at just on 0.64%, and gold fell hard in its final session last week, giving up all its recent gains and down another $22 to $1,687 an ounce. US oil prices have fallen sharply as well, to just on $18 a barrel, down $2 a barrel. The Brent benchmark has followed it down to be just on $28 a barrel. These levels represent 20-year lows in nominal terms and 70-year lows in inflation-adjusted terms. And the Kiwi dollar will open little change at 60.3 US cents. On the cross rates were soft at 94.7 Australian cents, and against the euro were also soft at 55.4 euro cents. That means our trade-weighted index is at 66.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.